Ever felt like your trading tools are vanishing into thin air? Tired of relying on indicators that are here today and gone tomorrow? Imagine a new approach, mastering trading with a foundation so solid that even the trendiest trading tools are no match. Get ready because I'm about to share 5 straightforward steps to calculating ADR for your favorite trading pairs. And there are no elusive tools or disappearing acts involved. When I began my trading journey, I never expected my trusted tools to fade away. But here's the secret: true trading starts with mastering and embracing simplicity. And that's exactly what I'm here to show you in this video. And don't tune out too early because I'm even going to show you a game-changing shortcut that'll reshape your entire strategy if you're already using ADR. Now, this all came about because one of the guys on my team reached out and asked me if I had any tools that I was using to calculate ADR for backtesting. The funny thing is, all of the tools that I used to use are gone. There used to be different websites that I was using to calculate ADR because it would have it in a chart already done for you. Every single trading pair that I was looking at was already done. But now a lot of those things have changed to paid only, or they just don't exist. So I figured I'd make a video and help everybody out just in case somebody else is having the same issue that we are. Now imagine you're looking at a daily time frame chart in the Forex market, which shows you how the price of a currency pair changes over each day. The average daily range is a way to figure out how much the price of a currency pair typically moves up and down in a single day. That can be very useful when you want to get in and out of the market quickly. Now, if you find content like this useful, don't forget to hit the like and subscribe. Share this with somebody else who might need the information too. It definitely helps out the channel, so thanks in advance. I'm going to break everything down for you in 5 simple steps. Now, first things first, you want to choose a period of time. So you need to decide how many days you want to look at to calculate the average daily range. So for example, you might want to look at the past 10 days. Next, you want to find out the high and the low for each of those days. So you'll want to figure out the highest price or the high that the currency pair reached during that day and the lowest price or the low that it went down to in that same day. Now, to do this manually, you can look at OHLC charts. At the top of your screen, you should see OHLC. So right here, OHLC. This shows you the open, high, low, and close of an individual candle. So if you hover over the candle, you see the OHLC chart changes to new information. This is where you're going to find the high and the low, the H and the L. And from there, you do a little bit of math. You calculate how many pips it moved between the high and the low for each of the candles. So to do that, you just move on to step 3, okay? For each day, you subtract the lowest price from the highest price. This is gonna give you the range for the day. How much did the price move up and down during that specific day? Now, remember in our example, we're doing this for 10 days. So you do that for 10 candles on the daily time frame. So move on to number 4, which is to add up the ranges. You want to add up all the ranges that you calculated for each individual candle on the daily time frame for the selected amount of days. So we said 10 days, that's going to be 10 candles. You want to add up how many pips it moved for each candle. Add up all 10 together. Then you're going to move on to number 5, which is going to be to average out the total. So to find the average daily range, you're going to divide the total number of movements by the number of days that you're looking at. So we're going to add up the data that we got from the 10 candles and then divide that by 10. So the answer that you get when you add up and divide by 10 this information is the actual average daily range of that currency pair over the chosen amount of time. Okay, so we chose 10 days. We're going to get the average daily range for 10 days, the most recent 10 days on that specific pair. You do need to do that separately for each individual pair. And remember, the average daily range does change. See, in this example, just looking at the chart, these are smaller movements than what these are back here. So we're going to have a smaller ADR here than what we would back here with the bigger candles. Now, this information can be extremely helpful for traders who are trying to make a decision about when to buy or sell a currency pair based on how much they think that it might move. trading is doing a lot of analysis, right? You are creating a hypothesis. You are following specific rules that allow you to get in and out of the market based on that hypothesis, because you can't say for sure the market's going to move down. You use the data that you collect from the charts to create this hypothesis. You know what? Based on this, the information is showing that this is a probability. Now, when you're calculating the ADR, keep in mind that this is historical data and that doesn't predict future movements with any type of certainty, but it can give you a general sense of what's been happening recently so that you can make an informed decision using that information. So there are indicators that you can add to your chart. So let's go up here to the top, click on indicators. You're going to just type in ADR, and one of the ones that is actually very simple and it gives you a little bit of information on the screen, go down to where it says ADR, or average daily range with forecast. This one only has about 221 people using it. I do like that it drops some horizontal lines on the chart for you to kind of show you that projection. Okay, this is just a forecast. It's giving you an ADR of about 61, and I'll zoom in so you can see it. So an ADR of about 61. Let's see if I can make this a little bit. Let's do white. Let's do large. There we go. It's going to show you the information here, and it's you can go in and change the settings to be whatever you want. The length parameter, the max time frame to display. This has to be used on a 1 hour time frame for this specific tool, but you can double check the information or double check accuracy by going in, figuring out what the ADR is manually on your own, and then going down to the 1 hour time frame to look and see if it's accurate. I just showed you step by step, just 5 simple steps of how you can actually go in, pull this information out to see for yourself. But if you want the shortcut, because I know some of you do, and I don't blame you for it, but I know some of you do. So I've given you a tool that you can use also. So you go to indicators at the top, just type in ADR and go down to the one that says average daily range with forecast. It's only 221 people using it. I do like this one because of the forecast, because y'all know how we mark up charts with fibs and things like that. It gives you some confluence or confirming information when you see these horizontal lines on the chart as well, based on what your fib levels are. So feel free, comment below, let me know if this was helpful for you guys. Let me know if you have any questions. I'm always here to answer those. Just drop those in the comments too. But as always, I hope you're having an absolutely amazing morning, afternoon, or evening, wherever you are in the world. And I'll see you in the next video. Bye.